Okay, folks, welcome back. Just a quick midweek review. So we had the dollar index break above its dealing range high here. Now, when we define a dealing range, like we mentioned in the previous mentorship review video from last weekend, I identified this range here as this high and this low, and we needed some measure of displacement. So it looks like we have, at least by first impressions, that we do have a measure of displacement. We do have a buy-side liquidity pool here that's not going to be named because the imbalance here, volume imbalance, has been noted. That's the next upside premium array, and then the buy-side liquidity pool over here. Since we've left the dealing range, I have the equilibrium price point identified now. The bulls, or if this is a accurate depiction of buy-side order flow, in other words, if it's underlying bullish, price should not go back below this level. This level is, we can get it pop up here, 96, we'll call it 96.80, just to round it to a nice institutional level. So 96.80 needs to support price. Ideally, it shouldn't even go back below this high, but we're going to remove this. This is no longer salient, and this is no longer salient. Now, if we were to continue higher, this is an objective we want to see for price. It's not a lot of pips, I know, but it still would offer further downside objectives for foreign currency. If we blow through this, which is quite possible, if order flow is indeed bullish, this will offer really no real resistance. It's just a point of targeting for next upside, but the buy-side liquidity pool would be the next draw. Now, should we roll over, trade back below this low, we have a volume imbalance in here, we have bullish order block. The mean threshold between these two down closed candles should be the line in the sand for any return back. Again, high probability would deem this high as the level it needs to defend. We don't want to see it go back below that. If we trade back down into the equilibrium of this dealing range, it becomes highly suspect that this is going to continue on the upside. Now, it can do that, but it needs to ideally, again, stay above this high. If at all, trading below this level here would put us in line to take these levels out for the dollar, which would be problematic, obviously, for the bulls. And if we do trade down here, I don't see that they would be a area to buy and continue higher longer term. I think that they would be the beginning of an unwinding that would eventually take the sell side liquidity out here. So what I've done for you is defined the importance of the dealing range we mentioned last week. And now that we've had one move beyond the dealing range high, we now ring in the equilibrium price point, and then we understand now what constitutes a high probability range. So now the dealing range needs to become whatever the intraday high is today, which in this case is 97.50, and then essentially the 97.80, which is calibrated obviously, but it's 96.77 if we're going to be splitting hairs. So I think it warrants a watchful eye for continued upside for dollar. Moving into euro, I feel that the same thing is said here with the dealing range defined as such, and the equilibrium price point. Price should not come back up to equilibrium. If it does, it needs to offer stiff resistance. If order flow is bullish on the daily for the dollar index, we are now targeting sell side liquidity for the euro dollar. Also, we've mentioned months ago this level down here, which is that weekly BISI, which we'll look at on a weekly chart. Zoom out a little bit. So we have the buy side imbalance, sell side inefficiency. That would be the level we would look for euro. Now, I'm electing to focus on my own study on euro only and not cable for this very reason. It looks a lot cleaner. The levels look a lot more decisive. So I'm going to focus on shorting euro dollar going forward versus shorting cable. And there's really nothing I need to say more about it except for now that we have this in place, we can start using our premium arrays, bearish order blocks, bearish fair value gaps, bearish breakers, those things, to frame a setup that would run the equal lows here and then maybe leave a piece on for that 110-20 level for a swing target. Okay, so that's where my focus is going to be. You should be doing the same thing with your studies, focusing and looking for bearish institutional order flow on Eurodollar with these levels in mind. Rolling right over into cable. This is our dealing range as it is. A break above this level would constitute a displacement for the buy side, and that would set up a great imbalance for selling short euro pound. That would be something you would bring in for that pair. But again, that's outside the scope of this discussion. We need to leave this range. Ideally, it looks like it tried to do something today on the buy side and was quickly rejected in there. Cable also is very, very influenced right now and manipulated as a result of the Brexit and the new prime minister. So much stuff going on over there. This currency is a no-touch for right now. Let it settle down. Let it work. Let its dealing range be worked out. At some point, it's going to bend the knee to whatever the dollar's ultimately going to do. But for right now, the technicals are so much cleaner on euro than it is on cable. It's better to utilize your time and studying the euro dollar because the levels are there. The draw is very clear, and we also have a weekly objective. Remember, down here, there's large fund liquidity, and it's going to be layered below these equal lows, not in the scope because it's a daily chart. We're not looking at 10, 20, 30 pips because we're looking at a daily chart. That model works for intraday, runs on liquidity. When we have a daily chart, daily charts incorporate large fund liquidity. So that means there's going to be a deeper run below old lows and above old highs for liquidity. That imbalance on the weekly chart, and again, I'll bring that back up for clarity over here, that should be the draw. Now, that doesn't mean that's all that it can happen. In other words, if we get a really bullish run on the dollar index, this could just be one objective, and then we have a volume imbalance down here, mean threshold, and then bullish order block. So there's a lot of other factors down here that would lead to a continued erosion on euro that was very easily aligned with a bullish dollar, whereas cable, while it could eventually move lower if there's a strong dollar, it still will probably be susceptible to any kind of Brexit news, and it will act like a disorderly child, okay, and just be a brat and do whatever it wants to do for a short period of time. Which, back in the 2000s, British pound did a lot of that. It would do things that would break the rules for certain things, but it also would create volatility. And that's okay. As long as we have volatility, we have imbalances, and when there's imbalances, we can have short-term intraday scalping and day trading, which still, if you are practicing for daily intraday volatility studies, using it on the 5-minute, 15-minute chart, you can still do those things with cable. Just know that we're in this dealing range for right now, and from a directional standpoint, it should drop with a strengthening of the dollar. But just know that the probabilities are shifted from high probability to low probability because of all the Brexit-related news drivers around this currency pair. And euro dollar is just really clean right now. And we've had very, very small ranges. We're starting to see large ranges. And so far we had a pretty respectable weekly range here, and it's only Wednesday. So we could see this thing expand and then create another large range day, or large weekly candle, I should say. And then, or a series of them to run into this order block and close this BISI out. Okay, that's going to be it. I'll have a lesson for you all in the charter members for price action model number 6 as a supplementary lesson. And this weekend's review, I will include a price action study for the foundations of a trading plan. So some of you folks that are really itching to start to put these things together, I'll give you a template to kind of like plug in as you go through the mentorship, what you should be looking for to kind of like fulfill certain roles in a basic trading plan. Now, it's not a trading plan. It's just the idea or the template that once you go through the mentorship content, as you go each month, you get more information. You can start fleshing out from a conceptual idea of what a trading plan would do. Obviously, once we get through all the 12 price action models in Charter Member, in 2020, in January, we will be doing the first real trading plan for model number 1. So it's actually fleshed out. And then once we go through those, you'll be in the advanced studies for algorithmic principles. Okay, but that's only Charter Member level, and that's in 2020. Okay, so I'll talk to you all this weekend. Be careful and good luck in the trading.